Hello everyone. If you sell a land or residential house property, then definitely income tax will be leviable on the sale of a land or residential house property or any other building. But if you can imagine, if you need not to pay a single amount of income tax by claiming the provisions of a income tax act, so no need to pay any single amount of income tax amount to the income tax government or government of India. Sir, how is it possible to say that is no need to pay any single amount of income tax act to the single amount of income tax to the income tax government? Sir, is this possible? Sir, how is it possible, sir? So it is very an interesting topic. Many of our general public has a single doubt that how it is possible to claim a exemption under income tax act to not to pay a single amount of income tax amount to the income tax government. So this is Abhijith Acharya. In today's videos, we are going to discuss with the same. So general reminder, please watch till the end and share if possible and like the video and subscribe to my channel if not you have not made the same. So welcome to today's sessions. So first of all, I would like to say what is long-term capital asset. First of all, I want to discuss with regard to the meaning of long-term capital asset because these exemptions can be claimed only if that asset that you are holding should be a capital asset, long-term capital asset. Okay, an immovable property. Let's say, for example, building, house property, or any other residential house property is held for more than 24 months, then such capital assets are treated as long-term capital asset. Let's say, for example, if you have purchased the land on 1st 4 2019 till 31st March 2021, that asset will be considered as long-term capital asset. So these are the general notes with respect to the long-term capital gain arising on the sale of that long-term capital asset. Number one, tax rate tax rate is 20% plus 4% cess. That is effectively 20.80% is the tax rate on the long-term capital gain. Second, basic exemption limit is also available. Let's say, for example, if your long-term capital gain is 5 lakh, if you are a citizen, then 2.5 lakh. If you are a resident, then 2.5 lakh is a basic exemption limit. If you are a senior citizen, 3.5 lakh, 3 lakh is a basic exemption limit. Then if you are a super citizen, then 5 lakh is a basic exemption limit. Okay. Then rebate of 12,500 is available if long-term capital gain is below 5 lakh. Let's say, for example, if your long-term capital gain is 4 lakh 80,000, then you will be eligible to claim a rebate under section 12,500. Okay. Then no benefit of chapter 6A is available to the SSE. If you have a long-term capital gain, say if you actually if you have paid the LIC premium or health insurance premium, then that benefit will not be available. On the gross total income, directly you have to pay 20% plus 4% cess after claiming a rebate or basic exemption limits as the case may be. Okay. Then indexation benefit is also available in case of a long-term capital asset. Sir, what do you mean by indexation benefit? Because it is like an inflation rate. Let's say, for example, on 1st for 2019, you have purchased a land for rupees 5 lakh. That 5 lakh on that date is not equal to 5 lakh as of today because of the inflation rate. So, in order to provide a benefit to the SSE, the government of India or income tax department has given a benefit with regard to the indexation benefit. That is called CII. That is, I have considered, for example, that is CII for 22-23 is 331, and for financial year 2021 301. You can easily understand with the next example that we are going to discuss in this slide. Then, as already said, we will consider one example. Mr. A is a resident individual, aged 45 years, has sold a residential house property in financial year 22-23, that is current financial year, for 10 lakh rupees. Please compute his tax amount. Sale consideration is 10 lakh, as I already discussed in the equation. And cost of acquisitions 5 lakh. I have just taken that example 5 lakh that he has purchased that house property in the financial year 2021 in order to provide a benefit to the SSC, because if you deduct a 5 lakh directly from that 10 lakh, then net consideration will be 5 lakh. On that you have to pay 20% tax amount. So in order to provide that benefit to the NSSC, Government of India has given an inflation rate, that is 5 lakh is not equal to 5 lakh of as of today. So 5 lakh of that 2021 year is equal to 5 lakh 49,834 as of today. So his net consideration is 10 lakh minus 5 lakh of 49,834, that is effectively 4 lakh for 50,166. Compute his tax amount. Gross total income, as already discussed, 4 lakh 50,166. Basic exemption, because he is a resident individual, so 2 lakh 50,000 is a basic exemption limit. Okay. Then taxable income 4 lakh 50,166 minus 2.5 lakh, that is 2 lakh 166. Then income tax rate 20% on 2 lakhs 166, that is 40,033. Rebate will be available because his gross total income, that is 4 lakh 50,000, which is below 5 lakh, then 12,500 will be available. That benefit will be available to the SSC. Then effectively tax after rebate is 27,533. Cess 4% on 27,533 will come to net tax, that is 28,634 is a tax amount that he need to pay to the income tax government in the assessment year 23-24. Sir, is he required to pay 28,634? As already discussed in an introduction part, is there any no benefit available to an SSC to claim an exemption under Income Tax Act by claiming the provisions of Income Tax Act? Definitely yes. We're going to discuss with regard to the same in the next slide. Exemption available only to the individual or HUF if it is a long-term capital asset. This is a little bit theoretical aspects. Please go through. I will once read out that. If you are not understood the same, we will consider the example in the next slides. I will go through these ones with the brief explanations. First of all, I would like to discuss this capital gain on sale of a residential house property only if you are sold residential house property and use it for buying that residential house property. In our last example, he has sold a residential house property. Then section 54, it is considered section 54. Next section is capital gain on sale of any long-term capital asset, not being a residential house property. If you sold a building or a land, then this section 54F will be applicable in that case. First of all, kind of assets transfer, that is residential house property he needs to transfer. Enough previous year, it is 22-23. And 54F, any long-term capital asset not being a residential house property, then only 54F can be claimed. New assets to be purchased, that is one conditions. One new residential house property should be purchased. Okay. In under section 54, if your long-term capital gain is below 2 crore, two residential house property can be claimed as an exemption only under section 54. Okay. Under 54F, one residential house property in India should be purchased by an SSC. Okay. Then time limit. He should purchase within 1 year before the date of transfer, because let's say on 30th September 2022 he has transferred his residential house property. Before 1 year he has to purchase a one new residential house property, or 2 years after the date of a transfer. 30th September 2022 he has purchased, he has sold a residential house property. After 2 years, that is within 2 years from the date of transfer, he needs to purchase another residential house property, or construction. He needs to construct a new house property within 3 years from the date of a transfer. That is 30th September is the date of transfer. Within 3 years, he needs to construct a new house property to claim a capital gain exemption under section 54. Under section 54F, the same criteria, within 1 year before the date of transfer, 2 years after the date of transfer, or he should construct a new house property, residential house property within 3 years from after the date of transfer. And deposit scheme. Sir, what do you mean deposit scheme? There is one concept like a capital gain account scheme that is available in both the case. First of all, I would like to brief it out. That is, if he is not able to purchase within 2 years from the date of transfer or construct within 3 years from the transfer, then he needs to deposit that sale consideration, whole sale consideration that he has already sold to one another bank account, designated bank account, that is called capital gain account scheme under a bank account, any bank accounts. For example, Canara Bank accounts also will be, that benefit will be available. SBI also that benefit available. In some other banks, you can just ask with the banks that I am going to deposit that sale consideration to a newly designated capital gain accounting scheme. That benefit will be available. That next amount of exemptions available under section 54, lower of capital gain, that is after deducting the cost of acquisitions, that gain or cost of a new asset, whichever is less, that amount can be claimed as an exemption. In the under section 54F, cost of a new asset that you are going to purchase or construction that you are going to construct, or that deposited amount into net consideration, net capital gain, that is after deducting cost of acquisition, that amount in our example 4,50,000 is 4,50,156 divided by sale consideration. In our last example, sale consideration is 10 lakh. That portion will be claimed as an exemption under section 54F. In both the section, there is one restriction. If a new asset is transferred within 3 years that you are going that you have already purchased, no, that new asset is transferred within 3 years from the date of purchase or construction, that exempt capital gain that you have already claimed in the current financial year, that is 22-23, that exempt capital gain will be taxable in the previous year in which such new asset is transferred. This is very uh, strictly followed. Should be strictly followed. If a new asset is purchased or construction is sold within 3 years from the date of purchase or construction, that exempts capital gain will be taxable in the previous year in which that new asset is transferred. These are all the theoretical aspects we are going to discuss with the help of an example, so that you will be in a better position to understand this exemption and how to claim these exemptions in a better way in your practical life. Let's consider the same example that you have already discussed. In that, you had to pay that 28,634 capital gain, that is net capital gain, that is tax amount to the income tax government. In this slides, we are going to discuss with regard to an exemption. After claiming exemption, you need not to pay any single amount to the as an income tax amount to the government of India. Mr. A is a residential individual aged 45 years, has sold a residential house property in financial year 22-23 for 10 lakh, purchased a new residential house property 5 lakh. Please consider this is a new concept. Purchased a new residential house property, that is within 2 years. Compute the tax amount. The same sale consideration is 10 lakh, cost of acquisition is 5 lakh, indexed cost of benefit is 5 lakh 49,834, net consideration 4 lakh 50,166. Till this working, the same workings has been followed. In the next lesson, that is already deposited that capital gain to for buying a new residential house property, that is exemption under section 54 will be applicable because he has sold a residential house property. If you sell a residential house property, then section 54 will be applicable. If you sell uh, other than residential house property, with regard being a long term capital asset, then 54F will be applicable. In this section, 54 will be applicable. Cost of new asset, that is 5 lakh, which already mentioned in an example, 5 lakh. Then that net consideration, that is 4,50,166, whichever is lower will be claimed as an exemption. That is 4,50,166 is an exemption. So net long-term capital gain is nil. Understood now? Long-term capital gain is nil. Congratulations, you have saved a tax amount by claiming the provisions of Income Tax Act, by claiming an exemption under Section 54. Through this, so we have saved a tax amount. In the next example, I have considered if you sell other than residential house property being a long-term capital asset. Mr. B is a resident individual aged 50 years, has sold a land other than residential property in financial year 22-23 for rupees 20 lakh, and he has deposited the entire sale consideration in a capital gain in a capital scheme, that is capital gain account scheme, within due date of filing a income tax return. Actually this is the basic condition. You have to deposit that entire sale consideration within the period of the due date of filing return. In case of an individual, due date is 31st July of 2024, 31st July 2023, actually in our example. Okay. Sale considerations 20 lakh. Cost of acquisition I have considered as cost of acquisition is 10 lakh. Indexed cost of acquisition, that is 331 divided by 301. 331 and 301 is a CII, that is cost of inflation index. In order to provide a benefit, 10 lakh is now equal to 10 lakh 99,668. Okay. The net consideration, that is 9 lakh 332. Okay. Exemption under section 54F, because why exemption under section 54F is applicable? Because in this section he has sold a land, not a residential house property. So in that case, cost of new in the exemption will be cost of new asset, that is cost of new or that deposited amount. He has deposited entire amount with the capital gain accounting scheme, that is 20 lakh, into net consideration, that is 9 lakh 332, divided by sale consideration, that is 20 lakh. He has to deposit entire sale consideration, that comes to 9 lakh 332 as a exemption, that he can claim an exemption. So long term capital gain is nil. Very important. If you are not claimed an exemption, if you are not deposited an entire share consideration to a capital gain accounting scheme, then he needs to pay. Very interesting. This part is very interesting. Then tax amount will be 6 lakh on 6 lakh 50,332. That is 9 lakh 332 minus 2.5 lakh. That is basic exemption limit at 20.08%. That comes to around 1 lakh 35,269. This was the tax amount if you had not that deposit, if you have not deposited entire sale consideration, if you have not claimed an exemption under section 54F. By claiming an exemption, he has saved 1,35,269 as a tax, as an exemption. He has saved a tax amount. Actually, by claiming a benefit under section Income Tax Act, you can save income tax amount. But consider, but one restriction is, if you are not utilized this 20 lakh that he has already deposited in capital gain accounting scheme, in order to purchase, in order to construct that house within a stipulated period, then that exemption, that is 9 lakh 332, will be taxable in the year in which that period is lapsed. Very interesting part. He needs to purchase, he needs to construct within a period of 2 years or 3 years, respectively. Okay, and this was the today's sessions. Thank you very much. If you have any doubt with regard to the same, please put your doubts under comment section. And if you can, and you can also mail to me. That is, I have provided my mail ID, that is abhiacharyacs at gmail.com, and you can WhatsApp me also under the given phone number. If you have liked the video, please subscribe to my channel, and please like and share the video to the many users, because many users have a same doubt with regard to the same. And thank you one and all.